In this video, I'll be going over how to use our earnings performance analyzer, which you can download in the description below, or which you can find on our website by going to TradeDefender.com and then templates. It's at the very top. It's called the earnings performance analyzer. What this dashboard will do is help you analyze a company's post-earnings announcement performance as well as forward-looking performance based on option statistics. First things first, we'll copy our app key from the Trade Defender dashboard. You can see down here that I already have the template downloaded and opened up. On the Start Here tab, we'll paste our app key into the yellow cell to get everything up and moving. Now onto the main tab. Here I have Apple in this yellow ticker cell, but you can paste any valid ticker symbol in there to view the results for another company. At the top we have some statistics which are pretty common. Last traded price, 52-week high and low, 12 trailing month PE for example. We also have the quick and current ratios, which are calculated very similarly, but we have both for good measure. On the right here, we have the EPS beat meet percentage, as well as the EPS miss percentage. This is how often the company's actual earnings were below the Wall Street consensus, as well as how often they were at or above. We also have another statistic called Eps Estimated R-Squared. What this tells us is how well correlated EPS estimates are with the company's actual earnings. If this number was 100%, it would mean that the EPS estimates and actual earnings figures move in lockstep with one another. If it was 0%, it would mean that they are completely disassociated with one another. This figure helps you to understand just how much faith to put in consensus EPS estimates for this company. Down below here, we have our adjusted close price chart. The green shading indicates periods after which the company met or beat earnings estimates, and the red shading indicates periods in which the company missed earnings estimates. Down here, we have the announcement dates of the last 11 earnings, as well as the pre-earnings open price, and then the post-earnings open, high, low, and close prices. We then qualify these with the max percentage change and close percentage change figures here on the right. Last, we have implied range. Here, we take the next 11 options expiration dates and calculate, based on option statistics, the range that the underlying is expected to stay in 68% of the time. But by adjusting this cell, we can adjust these ranges based on the level of risk that we're looking to take on. These ranges are based off of our probability in the money and out of the money heat maps, which we made in another video, which I'll also link below. Using these ranges and historical results, we can improve our odds with several different strategies. One popular pre-earnings strategy is to sell strangles just outside of where the stock is expected to travel post-announcement. With this strategy, you can cash in on pre-earnings excitement and volatility, which is almost certain to fall after the earnings are announced. You can use our short strangle dashboard in conjunction with this one to help you create the most profitable and well-informed strangle setups. The link to our short strangle tutorial and dashboard will be linked below as well. This form or method of analysis may seem familiar to you. After speaking with several of our users, we heard the name OptionSlam.com come up a few times, so we decided to check out their site. We thought that the core concepts behind OptionSlam's analysis were good, but the site was really lacking in its ability to allow people to expand upon the analysis, to incorporate additional data, or incorporate it into their existing workflows, or add their own analyses. The site provides you a price chart, as well as some basic statistics, implied moves, as well as information about the underlying's behavior after earnings announcements. So we created a similar analysis in Excel, included many of the statistics that we thought OptionSlam got right, created some of our own, like the EPS beat meet percentages, the EPS miss percentage, the EPS estimated R-Squared, and then we also expanded upon some of the figures that we thought OptionSlam could have done a better job on. OptionSlam gives you implied moves based on weekly and monthly options, but doesn't give you any sense of directionality. Is the underlying more likely to go up or down, or how those moves are changing as expiration dates go farther and farther out. So what we've done is we took the next 11 both monthly and weekly options expirations and found the high and the low implied moves based on the very latest implied volatility figures. We also added the ability for you to customize your range with our probability cell here. It's our best guess that OptionSlam creates their implied move based on a 75% likelihood, but maybe you're interested in taking more or less risk than that, and we give you the ability to control that, and understand how the ranges around that probability will change as time goes on. Additionally, all of the data that we've used to do this analysis is also included in the spreadsheet and updates as you update tickers. So if you want to dig into the options more, or if you want to dig into the estimates more, or the historical prices, you can. For example, here's our probability out of the money heat map, our probability in the money heat map, our historical earnings and earnings estimates, as well as our historical prices. You can also use other Trade Defender functions to bring in additional data, like our income statements, cash flow statements, and balance sheets functions. OptionSlam has a good core idea. With thousands of people paying for and consuming this analysis every day, do you really expect there to still be an edge left? By providing you with more information and the ability to add on your own analysis and experience and skills, we're able to help you cultivate your own unique market perspective, which is the only way to derive real edge in the markets. If you have any questions about this template or our other templates, or you'd like us to add features or information or expand upon certain concepts, please let us know in the comments below or email us at support@tradedefender.com. As I mentioned before, the links to this template, our short strangle template, and our short strangle tutorial are going to be in the description below. Thank you for sticking with us through this tutorial. If you enjoyed this video, please like and subscribe our YouTube channel, our Twitter, our Facebook. You can sign up for our free 14-day trial at tradedefender.com/register, and you can use the offer code EarningsHype for an additional $25 credit. Thank you.